The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. And in the words of one of our great leaders, Mortimer Duke, do we live in a great country or what? I posted the chart here for Yahoo. Most of you folks probably don't even know what Yahoo means. It means yet another hierarchical or Orpheus oracle. And I can remember when this stock was on its way to, as you can see here, going back about 20 years, they had the CEO for Yahoo on CNBC, and he was playing his guitar in Palo Alto, and he was barefoot. And of course, he was out in about 9 months. But Marissa Mayer came in a few years ago, and the stock has dropped 40%. But she gets a golden parachute if she's let go or fired of $150 million, just like winning the lottery almost. Anyway, let's move on to the markets. There was one thing that happened last night that I think was very important after this big drop we had yesterday. The Hang Seng Index dropped, the Hong Kong index, of course, dropped down and opened at the 786 retracement down around the 18,700 level, and it closed right near 19,000, so it was able to rally 300 points off the bottom. China was down a little bit, but nothing like what the Hang Seng was down. So that's really what we're watching here. Now, there's one other chart in Asia that we've talked about before, because if we want to look at something longer term, sometimes that helps a little bit. And this is the Nikkei Dow. And as you can see, we made a 382 retracement here a few weeks ago, which we were talking about when we made those big ABCDs and everything else. So to me, I still think we're in the midst of a little bit of a rally in here. We're going to have a little bit of trouble at 1910 in the S&P this morning, because that's nothing more than an ABCD structure that we had occur. Now, in about 12 minutes, we're going to have Shane Smolian from wolftrader.net, and he's going to give us a little lecture, a little talk on the cycles of astrology, and he's going to show some really great historical charts from 1929 and other areas, 1987, and show you how some of these things fit together. It's very, very interesting. And by the way, it's certainly not perfect, but boy, it certainly helps describe why some of these things occur and why they move up and down in such great harmony at times. So Shane will be on in about 20 minutes, but we'll cover a few other things before we get to that level. Folks, I follow the Canadian dollar quite a bit as I watch the crude oil, and the Canadian dollar is has really started to rally, and that usually means you're going to get a good rally in crude oil. Now, yesterday we went below the 61% retracement in crude by about 60 cents, and now we're back above it. So we've got a chance here in crude oil, and for the first time, we're getting some profiles from John Logan looked really interesting, and even though he wasn't wildly bullish, he said, it looks like it's going to possibly have a little bit of rally here. And the rally could be $10 or $15, and it could still go to $20. So just keep in mind that that's what we're looking at. Now, I wanted to share with you one particular stock that we've had on our watch list for quite some time, and this chart comes from our good friend Jim Bartolioni. And you'll notice here, this goes back to 2014. So you got 2 years of data here, but you can see the ABCD structures that are here in Tesla. And we are looking at a potential price in Tesla between 173 and 179. And boys and girls, that is pretty much spot on. I mean, we are almost there right now. So keep an eye on Tesla. This could have even though it's in a bear market, you could still have a substantial rally. The last time it rallied over $70 a share. So just watch Tesla. That's going to be very interesting here because we've completed actually three ABCD patterns here in Tesla over the past 4.5 months. And if you go back over the past 2 years, you've got another one in there. So this is going to be a really interesting pattern to see. And believe me, these things fail because this thing could go to 140, 160. You know, it could go down to back where it started, back at 116. You don't know, but that's the bottom line. Longer term, someone's asked me the question about the stock market, folks. This longer term stock market is so bearish, it just scares me. It really does when you look at it. The Barrett-Jackson Auto Show that we have in Scottsdale, Arizona every January, that's the premier auto show in the world. It was down 25% in sales. And our jewelry show that we have here in Arizona every year. It's a worldwide phenomenon. We have 35,000 jewelers come in to sell their goods, and business is way off. I mean, it's really, just a very, very big drop so far. Maybe it'll pick up, but right now those are two things that were going on. If you remember in 2009, when we had the big recession, the actual business for jewelry was really good that year. That was saying that, maybe things weren't as bad as they could have been. Now, let's move on to our Treasury bonds, because Treasury bonds and Treasury notes is going to be the next one that's going to test your mettle and see if, the world is going to be the way it's supposed to, according to THARP, and we'll see what happens. But as you'll notice, the bonds got up to that 163 level. That's the same level that we made, way back in July. Now, right now they're trading at 162. They've sold off, one handle from there. But this is a market that is going to be heading down, and we have higher interest rates. But what's happening during this time of big emotion here is because when Japan drops their rates to negative, and Germany, and then also Switzerland, Germany's not negative, but they're real close. Spain, I believe, is negative. But all they're doing is just pumping money in, folks. And this is not economics. That's voodoo economics. Stop and think about it a little bit. I mean, that's just not, it's just not something that, is very, very smart. One other question that someone asked is about, the big drop we had in stocks yesterday. And we say here at TFNN, at least I do, is any market that can give you 400 points on the upside can take 400 points away from you on the downside. We see this happen all the time. Up and down, up and down. One of the most amazing statistics that we have in all of the stock market, folks, going back to when they were under the button tree there on Wall Street back in, I believe it was 1796 or wherever heck it was when they had first stock exchange, there's been just as many up days as been down days. And then we've been in a bull market for 230 years. So even though we're in a bull market, you have as many up days as down days, and that's due to two things, fear and greed. So that's it, 877-927-6648. We'll be right back after these few words.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're up next, and I believe we have our friend Shane Smolian on the line from wolftrader.net. Shane, are you there? Not doing too good right now, but we'll see. We'll have him on here pretty soon, evidently. Are you there, Shane?
Hey, Larry, how are you?
Bad connection here, so we'll wait and see when we get him back up why it's not working, but we'll figure it out. A little technical help here will be appreciated, so we'll get this taken care of here. And then we'll not worry about it after that. One other question that someone has posed to me is about the commodities. And folks, we've got some really important things happening in the corn market. We've had some beautiful equal rallies that are absolutely phenomenal here. I wanted to go into that while we're waiting for our fearless leader to connect us to Shane. And I wanted to just to show you the corn chart here, because it really has, if you like trading with the trend, and I know some of you do, and you like harmonics, you'll notice here that this corn chart is really phenomenal here. We're right up against this 374 level. And as you can see, it's an equal rally that we had November to December to January to February. If you counted the days, bada bing, bada boom, they're equal. So that is a beautiful equal down to, we've had 1, 2, 3 lower highs after the 3 drive to a top was made back in October. Then we had a $1.60 break, and then we will see where we have going on right now. I think we have Shane on the line now. I'm not hearing it, so I hope we can get him on, because his time is very valuable, and I don't want to lose him. But for some reason, I don't have him. I don't have him on the line, so there must be something wrong.
Larry, can you hear me?
Hey, there we go. Looking good, Billy Ray. Feeling good, Lewis. Hi, Shane. How are you this morning?
Good morning. Thanks for having me on the show today.
Oh, it's my pleasure. Listen, we've already introduced you. Of course, everyone knows who you are, but we're going to start out with the one of your specialties that very few people ever follow, and that's the influence of the Fed on U.S. equity markets. Do you want to start with that one?
Sure. Are we on the January chart here, the January crash?
Yeah, that's chart number one in your group, and then after that we'll move down to the influence of U.S. equities in the August 15th crash. But right now we're on the January 16th, so why don't we do that one?
Okay. So the first thing I want to point out here is that before we get into any price targets on the market, we need to understand that we're in a very unique time right now with the Federal Reserve and the quantitative easing that has gone on, and their constant hand in the market. And so what we've done here is we've studied the Fed for many years. And, a lot of people have conversations about the Fed, and they say, well, the Fed influences the market. And then other people say, well, no, the Fed doesn't influence the market's efficient. And they get in these arguments all the time, and no one really has any data to support one position or another. So what we've done is we've taken all the data from the Federal Reserve, and they publish this daily. They send it out in an email. They send out all the lending and the repos and the purchases and the sales and the mortgage-backed securities and the treasuries. And we put all this information together into an indicator that we call the Fed juice. And the market basically follows what the Fed does. And if you take a look at this chart here, this is the January crash, and right around the new year, you can see on the bottom of the chart, that's the Fed juice, the very bottom, that green chart, that they basically shut that juice off, and that somehow this juice that they put out there gets into the market, and it's a combination of many things. And when they shut that off, the market almost always responds exactly to what they're doing. And you can see here, I have a stochastic in the middle of the actual price, and it almost looks identical to that stochastic. So, if I can look at the Fed's chart and not even look at the market and tell you what the market's going to do, clearly it's influencing what the market is doing. And right here at the bottom, you can see that the Fed juice bottomed in January and has been heading up ever since. And you can see that the market has really, really struggled here to advance back up. And just yesterday, it rolled back over down. So the dangerous thing here is that I think the market is so weak that it can't do very much on its own without the Fed in there. And the fact that they've now raised interest rates has reduced their base that they use as collateral to lend out these securities to banks. So I think they really kind of painted themselves in a box right now, and they're somewhat limited right now with what they can do. So that's rolled over, and that's why we did not see a bounce yesterday in the market, why right around 10:30 or 11 is usually when the Fed comes in with all of this stimulus into the market. They didn't do it yesterday, and that's why the market just continued to sell off. So you can see that's rolling over, and this is not an indicator of the market, the one on the bottom. This is what the Fed is doing. This is a blind chart of the amount of money the Fed is putting in and taking out of the market on a daily basis.
Well, the one chart that I really liked is the next one, and that's what happened in 2015. And this just goes to prove what you just said about 2016. The same thing is occurring.
Right. Okay. So, a skeptic of this could argue, they could say, well, that's just one chart. It could have been lucky, and let's look at how it does in another time. And time again, when you look at the market, and you look at these declines, it's always coincident with the Fed pulling back their juice. So in August, you can see before the crash occurred, you can see at the very bottom, that green chart, that the Fed juice topped and started falling down, and the market eventually followed and crashed. And then you can see right when the market was at a bottom, they started putting the juice back into the market, and the market rallied. And again, this is not an indicator of the market. This is not a MACD. This is not a stochastic of the market. The middle chart is the market. So again, if I can blindly look at what the Fed is doing and predict the direction of the market, there's clearly a correlation here. And we can go back over and over. I mean, I can go back to almost every decline, and it's coincident with the Fed pulling back on their stimulus. So, this is a very real thing. I mean, this is data to support this. And, these are just two charts, but so every time they pull that back, the market goes down. So this market, I think, is in a very fragile place right now, and we have to be very careful. But the point I want to point something out here, too, is when we're talking about downside targets to the market, we have to be very careful about that, because if the potential for the market, let's say without the Fed, is to go to 1,500 or something on the S&P, if the Fed comes in and decides to start stimulating the market, it's not going to go to 1,500. It's going to bounce higher. So we have to be very careful about that. And this makes forecasting much more difficult, and it makes the ultimate price targets not irrelevant, but it's kind of, you got to ask yourself the question, is the Fed juicing it or is the Fed not juicing it? So when they're juicing it, the market's going to have a harder time going down. And so that's the backdrop I want to put here before we get into these cycles, because ultimately they can come in and start printing as much money as they want. They can do anything pretty much that they want. Now, ultimately, will that fail? I don't know, but I can tell you that I can track what they're doing, and I can tell you that when they're putting that money into the market's going to have a hard time going down.
Yeah. Stay with us. We're going to take a little break here, and we're going to go into your planetary speed index, okay?
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have Shane Smolian from wolftrader.net, and we're going to be talking about the planetary speed index that he's worked on. Do you want to go ahead and describe this beautiful, colorful graph that's here?
Yeah. Are we on the planetary speed summation?
Yes, that's the one. But explain to the folks that you look at so many things.
Yeah, the only thing I want to point out here is that you see all these little squiggly lines here. What that is that represents the planetary speeds of each individual planet, and I've included these hypothetical uranium planets too. And so what we've done is we've taken all of these speeds and we add them all up to get one indicator. But you'll see that they're not all perfect sine waves. So some of you that are mathematically inclined know that a sine wave oscillates between -1 and 1. And they look similar to a sine wave, but they're not quite a sine wave. And, for a sine wave, it has to go negative. And, like at the very bottom, the sun is always direct in motion, so it's not going to have that negative speed. So we go to the next chart down here that says planetary speed of sine waves. What I've done with this software is we've normalized all of these orbits, these speeds, into sine waves. And so you can see that they're all very periodic now, and they're sine waves. And so the importance of that is that if you go down to the next chart, it says the planetary speed of the sine, the one that's on page 6, that has 2006 to 2016, we're able to get an oscillator based upon the planetary speed in the market. And so you may say, well, what does planetary speed have to do with the market? Well, first of all, this is not a transit. This is something completely different. This is how fast the planets are actually moving. And we found that the market does not like when planets are moving slow or retrograde in motion, when they're going backwards. Markets tend to have these crashes during those times. So this is not a transit. This is just, again, how fast the markets are moving. So it's hard to see right from this broad-based chart from 2006 to 2016, the correlations. But if we scroll down here, I want to go to the chart that says 2011 crash. Now, this was one of the first crashes that we forecasted using the transit. But this chart here, you can clearly see that the market was following the speed of these planets almost to the T. Now, on these waves here, you see there's these little squiggly lines that are quicker, and that represents the speed of the moon. And so you can see here that I have this highlighted. It's like 7/26, right, July 26th. That is, the planetary speed index had peaked, and then it's on that right shoulder, and that's when the moon peaked, and then the market fell exactly at that peak, and then it bottoms exactly at the next bottom. And so we tend to find that in crash situations, the market will follow this index almost to the day.
Shane,
go ahead.
We have a question from one of our listeners, and that is, you mentioned the moon, and I know you've done a great deal of work on the moon. So when you do your shorter term things like intraday and putting on positions, you watch the lunar cycles quite actively. Is that correct?
We do. We watch the lunar cycles, and then we go back 12 cycles on the lunar cycle, because I think going back more than that, I think that's too much, because, again, we have this constantly changing market with the Fed. So I only really want to look at the last 12 cycles with the moon, and we want to look at the new moon and the full moon specifically, right? Because the new moon tends to mark the beginning of a cycle. And so since we're in a downtrend, this February 8th new moon should be a top ready to roll over to go lower again. So always watch the new moon and the full moon, and then we look at the cycles for the last 12 periods of the last year on the lunar cycle.
That's very good. Okay,
Okay, so getting back to this chart now, we have a lot of ground to cover here, but you can see in this 2011, it basically mirrors this action of the market, and it does it very well. And I think when the market gets emotional, that the speed of the planets just directly mirrors the emotion of the market. So, you may have some skeptics may look at this and say, well, that's just 1 year. Let's look at more years. Let's show me some more crashes. Let me see that this is real. I mean, I'm still a skeptic here. Let's see how this did. So let's go to the next chart. Let's go to 2008. So this was the 2008 crash, and you can see that it followed it once again, and it had that left shoulder where it peaked up. And then I highlighted there on September 21st, you can see that the lunar cycle, that lunar peak had peaked up there. That was the exact peak. It fell again and bottomed almost exactly with that lower moon phase, went up, and then it kind of mirrored that fall into there. Now, I want to point out that in March, that we got to be careful with this because this is when the Fed came in and everything changed. The whole ball game changed in here. So, a lot of people since 2009 have been scratching their head and saying, this doesn't make sense. How is this doing this? The indicators aren't working. That's because you have to look back at that Fed juice that I showed you in the beginning. We have to follow what the Fed is doing. All right, so, and can we go to the 1987 crash?
Sure. We're going to do that, but we're going to have a break in about 2 minutes, but we're going to continue on until the break, and then we'll have you on after the break also, okay?
Sure. You want me to keep going?
Yes, we're on the 87 crash, and boy, do I remember that one.
Yeah. Okay, so 1987 was a unique time because we had some of the tightest planetary conjunctions in that summer that we've ever seen. Like, there was a bunch of planets that were super, super conjunct. And what I found with the transits is that the positive transits tend to affect the markets more than the negative ones. In other words, the positive ones tend to really run it up, and when there's an absence of positive transits, the market will tend to fall. Negative transits can be positive or negative depending, but positive ones are typically always positive. So we had this planetary speed index was bottoming around late 1986, and it started running up. And you can see that, again, it mirrored the market's run up, and that peak actually occurred before the peak of the market, right? You can see it, almost the same situation as the last couple ones. This time, if you look over on that right shoulder, there's the first right shoulder, then the second right shoulder. On August 17th was when it peaked, and that was almost exactly with the market top again. So on that right shoulder, that was almost exactly the top, and the market started falling again into that next bottom and then the peak. And then it mirrors, once again, it mirrors what this lunar phase is doing. So if you count over from these troughs here, from that right shoulder, the third right shoulder, you go the one that I've highlighted, then you go another one down, and then the third one after that is the last peak right before the crash. And then when it fell again, that's when the market collapsed. So it's very important to watch what the moon is doing in addition to all of the planets. So the moon is the closest satellite orbiting the Earth. It affects us the most. It affects our emotions. And when there's a crash, it's an emotional event. And so we really need to watch what the moon is doing. And again, once again, this is showing the exact turning points of the market and the exact bottoms of the crashes, and they match this index exactly. Now, one more thing I want to point out, this index has nothing to do with the market in the sense that I have not correlated this with the market. This is not back-tested. It's not an indicator of the market. It's not a MACD. It's not a stochastic. This is purely how fast the planets were moving. Now, we can combine this with transit and get an even more accurate picture.
We've got a break here now, so stay with us, and we'll finish up with the, because this is very interesting to us, so we'll finish up in just a minute.
Sure.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off.
Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, and we have Shane back on the line, and we're talking about the indicator that you're using. You want to go ahead, or do you want me to move on to 1929?
Yeah, we can move on to 29. I want to keep moving here. So
Sure.
Maybe somebody looked at the first three charts and like, well, 2011, 2008, 1987, maybe it's all just luck. Let's look at the big one. Let's look at the 1929 crash. Let's look at the big Great Depression. So I said, okay, fine, I'll put this chart up too. It works. It works. It's got to work all the time if it works, right? So, all right. So if we take a look over here, this is 1929, and you can see the planetary speed index was peaking. It was peaking a little bit earlier, but once again, you can see on one of those right shoulders there, it's like the third one down from the peak. That was the actual peak of the market, and it almost got the exact day again. It was August 29th, and then each of those subsequent falls of the lunar phases mirrored falls in the market and peaks, and it basically traced it all the way down, and once again, it forecasted that decline, or mirrored the decline, let's just say, and then it went up again, and then it fell again. You can see that it's outlining that subsequent rally, and then the decline again into 31. So those are just some examples of the planetary speed index. Now let's go on to the spectrum analysis for the highest cycle correlation on the next one.
Okay, we're there.
Are you there?
Yep.
Okay. So let me explain this real quick. So yesterday you had on Stan Harlan. He was talking about this 7-year cycle, which is a very real cycle. In fact, that shows up on the spectrum. It's like 6.95 years. It's a very good cycle, what he was talking about. It's good information, what he was telling me. It's all true. What I was looking for, though, is a cycle in the 15 to 20-year period. And what we can do is we can run a spectral analysis to find the best correlation for the best period of the market. And what I found was 3 peaks here, the best correlations in the market here. I found these 3 peaks here. And so if you go down to the next chart, you can see these 3 cycles here. It says peak cycle 1, 2, and 3. And it's showing us right now at the market, it's showing us at some type of a top. The question is, which of these 3 do we look at? Which one is correct? Are we topping right now, as it says in cycle 1 and cycle 3, or as cycle 2 says we have a little bit more ways up to go? So my solution to this was, let's go down to where it says 3 peak cycles through 2023.
I'm afraid to show this one. This one's scary.
Yeah. I mean, no matter how you look at this, it's not good for equities, and it shows us at a peak. So peak cycle 1 shows us at a peak going down for 4 years. shows us going straight down. Peak cycle 2, it shows a little bit of an up, but basically it's down for 4 years. And then the third cycle shows us going down for 2 years, up for 1.5, and then down for another 2.5. So this is where I came up with the forecast of a 2 to 4 year bear market, starting basically now. But what I decided to do was to average all three of these together to get one big cycle. In other words, I took the top 3 cycles and I averaged them together. So if we go to the one that says solution here, you see there's the solution average of 3 peak cycles. I averaged these together, and I try, and this is, again, this is the best I can come up with because I don't know which of those 3 is the best one. So this shows us more or less peaking now, and it's going to show us declining for the next 4 years with maybe a little intermediate bounce of 2 years. So if we could go to the next one that says average of 3 peak cycles time targets.
Sure. That's the one we've just posted just now.
Okay, so it has a top in the spring of 2016, and for those of you who are Elliott Wave followers, okay, and I'm not so much of a wave follower, but you can see here there's actually 5 waves in here. It goes down 1, second wave up, third wave in the middle, fourth wave up, fifth wave down. So those of you who are wave fanatics go crazy with this because it looks like an Elliott Wave going down. And for those of you who are expecting a crash with Elliott Wave, that would be a C wave, the third wave of the corrective decline. But regardless of whether it's an Elliott Wave or not, I just thought that was interesting. The top is spring of 2016, and then we're going to basically fall for 2 years. So the first bottom, according to the cycle, is mid-2018, and then we might have a little rally for maybe about a year, and then it says it's going to fall again through from the winter of 2019 into the summer of 2020, and that's that or late spring summer, and that's a projected bottom into there. So that shows us more or less 4 years of declining market with a possible bounce at around 2 years. So again, these are cycles; they're not perfect, but I did pick the 3 most highly correlated cycles in the 15 to 20 year spectrum, average them together, and this is what it shows us. So, and when you put this together with the planetary speed index, you can really start to try to time a bottom or a top in the market. So the planetary speed index peaks, I think it's peaking like in the summer. So this makes sense that this says spring here. So then the next fall would be, harder on the markets and then, decline from there. So it's a scary looking chart, but we need to also keep in mind that the Fed will be active and the Fed will be in there trying to stop a decline in this market. But, I can't give you price targets because ultimately if the Fed does come in with more quantitative easing, which they will, the declines will probably be less. Unless we get a full scale panic, which is possible. We just have to always keep that in mind. Do you remember Empire Strikes Back when Yoda was telling Luke and they were saying, don't underestimate the power of the Emperor? Remember that? They said, don't underestimate his powers. Well, I always tell people, don't underestimate the Fed because they will figure out some way to come in to try to stop this thing from crashing. So be very careful about shorting. I mean, that's, it's a difficult environment to short when you have the Fed coming in all the time with these purchases and these stimulus. It's a difficult trading environment. So regardless of whether we crash or not, or just this is a gentle decline, always keep that in mind that the Fed is in there actively trying to prevent this thing from crashing.
Now you've got the last chart you've given us is the one going back to 1901 to 1926, showing the same thing. This is an amazing correlation over this 5-year period.
Yeah, this is these cycles together. And again, just to clarify, these cycles were the length were 17.7, 19.3, and 20.1 years. So the average cycle is about 19 years. So we have about 7 of these cycles, which is good. I'd want to see about 5 to say that it's a good cycle. But in early 1900s, you can see that this, the market basically followed this path exactly. This is the average of the 3 that I was talking about. But I just took one snapshot here. I don't want to just flood you. There's so much information today. But, I think it's a pretty good cycle. I think we can use it as a basic roadmap. But We will need to update it each year or throughout the year, but this just shows you the power of the cycle. And again, we have enough sample size here that I think it's legitimate and valid. So, 7 cycles that's enough. 5 for me. 5 is the bare minimum that I'd like to see for these cycles.
Mm-hmm. Okay, we're going to have a break here pretty soon, and then we want to have you back. But someone's asked about your educational background, Shane. Do you want to give us a little brief description? Wait till we come back.
Yes.
There's some music,
Sure,
and then
sure.
tell us where you've been and what you've done. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have Shane Smolian from wolftrader.net, and the question posed is, tell us a little bit about your background, Shane. I know you've done mathematics and physics, but tell the folks, what your educational background and your experience is.
Sure, no problem, Larry. I have a background in mechanical engineering. My undergraduate or bachelor's degree is in mechanical engineering. Then I went and worked as a programmer for a major company, programming, websites and databases. And then I went back to school, got a master's degree in biomedical engineering, and came back. And then I actually went into education for about 12 years, where I was a professor of physics. And during that time, I was also developing trading models, and so now we just trade full-time and manage money. and that's what we do full time. So that's kind of the evolution. And the physics is a really important background. It really gave me, I think, a solid, grip on these cycles and these transits, and to really, to understand the waves and the indicators. It's a good background to have. You understand, like I say on my website, the concept of the position, the velocity, the acceleration, the derivatives, all of that comes into play. And, and then studying the Fed since 2009, that's a whole new world too. And it took us a long time to figure out what was going on with the Fed. But now we understand what they're doing and what their role is.
Now, if the folks want to reach you, they go to wolftrader.net. Is that correct?
Yes, you can go to wolftrader.net, and when you log on, there'll be a little pop-up. It should pop up and say subscribe to free email. So I send out periodic updates on the free email, and you can send me a personal email at shane@wolftrader.net. And if you have questions, we have two services. I have a newsletter that I just started putting out, a monthly newsletter that it will tell you the turning points of equities, and I'll talk about these indexes. It gives you like a little chart at the end of the month of turning dates, and then I also talk about solar cycles for the SPY, the GLD, the soybeans, oil, JJC, which is copper, and the TLT, the bonds. And then I actually put the Fed juice on a cycle.
Okay.
So
well, listen,
we have a full-time service too, but they can check that out. Give me an email, and I'll answer any questions.
Thanks for being on, my friend. We'll have you on again soon.
Thanks, Larry. Thanks. Have a good day.
You bet.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.